The 2008 global financial crisis. Housing prices climbed steadily through the early 2000s. Banks started giving mortgages to anyone who asked, even people with no income or terrible credit. These were called subprime loans, risky bets that borrowers could never realistically repay. But banks didn't care about risk anymore because they found a trick. They bundled thousands of these mortgages together, sliced them into complex financial products, and sold them to investors worldwide. The risk got passed along, hidden inside instruments so complicated that even experts couldn't understand them. Everyone believed housing prices would keep rising forever. Homeowners borrowed against inflated values. Banks leveraged these assets 30 times over. The entire global financial system built itself on the assumption that American houses would never lose value. Then in 2007, people started defaulting. Housing prices dropped. The complex financial products backed by these mortgages became worthless. Banks that owned them faced catastrophic losses. Lehman Brothers, a giant investment bank, collapsed. Panic spread globally. Banks stopped lending to each other, unsure who was hiding toxic assets. Credit froze. Businesses couldn't get loans. The stock market crashed. Millions lost jobs, homes, and savings. Governments spent trillions bailing out banks to prevent total economic collapse. Taxpayers funded the rescue while bankers kept their bonuses. 2008 revealed that the financial system had become a casino where banks gambled with borrowed money. When they won, they kept profits. When they lost, everyone else covered the bill. The crisis proved risk never disappears. It just gets redistributed to those with less power. Creation of Bitcoin. After 2008, trust in banks and governments shattered. They had caused a global crisis, then rescued themselves with taxpayer money while millions suffered. People started asking, do we really need these institutions controlling our money?